What's up, guys? JJ Fade 23. How's it going? I'm gonna make a trade recap video of SPY today. One of my favorite setups that we ever get in the stock market. Honestly, I think if you could trade nothing else and just trade these setups when they come, and you could make a lot of money and you'd have a really headache-free trading career, I'd say. So, first of all, every time I make a recap video, you have the haters that like to say, "Oh, after effect, yeah, after effect, whatever." So the point is, here's my chart from SPY. I posted it on Twitter, posted it in the room. Look at what everybody in the room knows what we're looking for. Everybody knows the setups. So, after the fact is how you make videos, right? That's how you make videos, after the fact. Anyway, so guys, number one, all right, first things first, I like to find confluence, all right? So if you put your fibs on from here, the most recent swing high to the most recent swing low, all right? We had the 50 fib here. We also have this breakout retest level here, all right? So guys, and if you notice this level has got broken out but never been retested. It's a very healthy level when the breakout has never been retested. Usually they go up here, come back down, test it there, right? And then if it comes back through, it might break. I'm not saying it can't break, but I like when it's a fresh level that's never been retested, even if it's been this long, I don't care. So we had a major trend line here, which a lot of times you go a little below it and reclaim. Plus we have the breakout retest plus the 50 fib, okay? Now, guys, let's go to the daily chart. I want to show you something. See this volume we had yesterday? This is a massive volume, guys. You will notice a lot of times on any time frame, I don't care if it's the 1 minute chart, the 5 minute chart, any time frame, whenever you have a big capitulation, a sell-off, or buy, you'll notice a lot of volume on that day. Most of the time, the reversal happens on that day or the next day when you have a big volume spike like this. You'll notice when you go to all these like big gap downs, the volume is a little elevated, right? Volume is a little elevated. The volume is a little elevated on these days. See that? Look at that. Guys, these are reversal indicators, right? If you go look on a 5 minute chart, you're going to see the same thing intraday. Look, volume spike on the reversal, right? Volume spike. I've said this many times. I used to practice with take the candlesticks off and just look at the volume and see if I could tell where it was going to bounce from. Mark up the chart and then go back and look at it. All right, so now Friday at the close, we had a huge drop. The other thing I like to use, guys, and I talk about this all the time in every video, when you come off, the daily 4 is this green line. It's such a short-term EMA. When the price actually comes off of it, volume reversal, it likes to come back to it. It can't stay off it for long. I don't care what chart you look at. You can pull up any chart in the history of the stock market. Watch how long the stock stays off the daily 4. When there's a gap off the daily 4, it comes back to it that day or the next 90% of the time. Look, comes off the daily 4, comes back to it. Comes off the daily 4, comes back to it. Anytime there's a gap off the 4, comes back to it. Flush off the 4, comes back to it, right? I mean, look at this. Comes off the 4, comes back to it. Comes off the 4, comes back to it. Comes off the 4. Now, I got stopped out for a 2-hour loss Friday. That's fine. I took a 2-hour loss. I knew if we gapped down again today, look how far we are off the 4. Way off the 4 I opened today. There's a huge gap in the chart. We're also coming to the 50 fib and the breakout retest level. So now, I know what I want to do. We have a long kind of like trappish thing, even though I wasn't trying to really long up here under the EMAs. I only long away from the EMAs or I short into them. But down here, we're like 1, 2, 3. This is one massive, another gap down day. Huge gaps in the chart. It's going to bounce 90% of the time when you have this many days down in a daily 4 that far away. And by the way, that was my target. That's why, guys, if you'll notice on the, hold on. You'll notice on my chart. Where's my chart? Sorry, guys, one sec. If you notice on my chart, my exit, look, my exit was a top tick because I was scaling out at red to green psych levels, and then the final target was the daily 4, which we penny touched, right? We penny touched the daily 4, the green line. That's why now it looks like we went a little over, but that's only because when the stock tanked back down, it pulled it down to it. So guys, that's why I was able to do that. Now, intraday, what's going on here? So we know the plan. We want a long SPY because it's literally friggin' huge extension to the downside, off the 4, multiple days gap down. We go to the 5 minute chart, pre-market data on. All right? Pre-market data on. What are we doing? Okay. First of all, I noticed in pre-market that we came down to this 480 level. That was a very, very, very key support level. Number 2, we have left shoulder, right shoulder. Head, neckline, left shoulder, head, right shoulder, inverse head and shoulder pattern. All right. Number 3, guys, we bounced off this level pre-market. I put my fibs on here. I always want to be entering back down into somewhere below the 61 fib because it gives me the best risk reward. So, stock market opens, we flush. When it comes down towards here, I take a starter. Once we came down here, boom, we rejected that. I saw this bullish candle start to form, enter. And now I'm just scaling out into lower high position this way, which would be like this. Right? So I put my fibs on this way now. Now scaling out into here, scaling out into 500 a little, scaling out into red to green, ultimately into my daily 4 EMA. And then what does it do? It just rejects it. I could have shorted that. The first time back to the 4, you can short. I prefer to use the 8, but the 4 sometimes works really good on SPY. SPY loves the 4. I don't know why. So that was literally just that easy, you guys. Just knowing what the daily setup is, watching for the good risk reward, risking off pre-market low, really risking off around that 480 level. And if it just came flushing down here and broke through, I would have took my starter off and called it a loss. I didn't add until I had the confirmation. I only took a starter and I'm waiting. Once I saw the rejection, little fake breakdown right here. And if you go on to, look, if you go into a 1-minute time frame, you can do stuff like this, right? You just throw a trend line on here. I don't like to use a 1-minute chart on the, big large cap stock, so I always look at the 5-minute, but sometimes it makes you get better entries. So I keep it on the 5-minute. I just look for those bottom tails in my level. I'm waiting for the bottom tail. Boom, got 1, but 2. Once this low breaks and reclaims this high, now I'm really interested. Then I see all of a sudden, boom, big green candle coming, enter. My stop goes below the 580 level, the 480 level, and now we're just scaling out into the targets. It pretty much, guys, daily chart, amazing setup. Really extended to the downside, off the daily 4 into a breakout retest level and a 50 fib, plus the intraday inverse head and shoulders pattern. Plus, guys, if you notice, let me make this a little zoom in right here, all right? So, guys, when do I look for high or low position? Remember what I told you? Let me take these circles off so you can see, all right? This is the swing low. This is the swing high at the moment. Why do I think this is going to make a high or low besides the fact that we have an inverse head and shoulders? Because, guys, we made a higher high than this, right? We made a higher high than this high right here. We also made a higher high than this high right here. Once we make a higher high, we want to come back down and make a higher low. If we only went up to right here and failed, like say if the open was down here and it popped up, it couldn't make a higher high, it just started going back towards the lows, I would expect to make a lower low because we made a lower high. Once we make a higher high, now I'm looking for a higher low. I want that higher low to be at least below the 61 fib so I can have the best risk reward. I usually try to enter in this zone right here, between the 61 and 78% fib, risking off the true low, which is always, guys, if you have your stops, if you don't have your stop below the true place that it failed, then you're making a mistake, right? Unless you have a really obvious trigger, yes, on this wick down candle, on this bullish engulfing, you could put your stop right here. But you need a really good trigger like system, either triggers like stuff candles or inverse stuff candles, bullish stuff candles, or fake breakdowns or something if you're going to move your stop to away from a true place that it failed, right? This is the true place it failed to go lower, so I want my stop below that. And that's pretty much, this was a crazy move. I didn't expect that to go that fast and that hard, but hey, it was awesome. When you make good trade plans and you stick to your system, you get rewarded sometimes. That's just what it is, right? Now, for the most part, yeah, that was the. Oh, guys, I wanted to show you another setup that I told other traders in the room to take if they missed this. So the next setup that I use, if I miss this entry right here, right, I will never long. Now I switch to the 10-minute EMAs with the pre-market data off. Always, guys. Pre-market data off because the 10-minute EMAs, look, with the 10-minute EMAs on, you get a lot of crisscross applesauce. I don't like that. With the 10-minute EMAs off, they get much more smoothed out. Look at this. Much more smoothed out. I mean, obviously when the stock's going sideways too long, they tangle. But in general, they are much more smoothed out. Now, let me add this one thing. moving average, the 50 EMA, okay? So what? Stay with me for a sec. I like to have that red. Okay, so guys, notice, right? Notice right here, we went up. We did not break the 50. Yes, we made a higher high than this by a little bit. But we did not break the 50. So that's not a big enough move. Now right here, guys, we made a higher high over this high, all right? We made a higher high and we broke the 50. When this happens, when the stock has enough power to break over the 10-minute 50 and make a higher high, now what am I doing? Now I'm looking for a higher low because it showed me that this is a demand zone down here. We now know that we have a demand zone here because we made a massive move that was able to break the 50, which is a great gauge that I realized over the years is a great gauge to tell me. Not only that, we made a higher high over this last high. Now I do the same thing. I put my fibs on and I want to enter on higher low position. So when the stock comes back down below the 61 fib, you in between the 61 and 78% fib, you long, risking off the low. And now after hours, stock market's at, where are we here? We're up at 408. So it's up $4 more now. So if you longed it right here in this area, 493, don't get me wrong, that's a big risk, $10. But guess what? You're already up almost 2R. By tomorrow, you probably will be up 2 or 3R. Now, this is the second setup, and that's it. There's no other setups today on SPY. As far as I'm concerned and my playbook's concerned. We had the exhaustion gap down, and we have the break of the 10-minute 50 and higher low position trade, and that's it. This is why I don't get caught trading all this crap, because there is no other crap. It's very specific playbook setups, and that's that. They either happen or they don't. No in between. So that's that's the story, and I'm sticking to it. If you have any questions, let me know. All right. Thanks, guys.